morning.
Good morning, Katie.
We're glad that y'all are here. Well, Kim, just to be mindful of our time and because I have a feeling John has so many fabulous things to share, we're going to go ahead and get rolling. Of course, this is recorded, so people can come back if they've missed the beginning. So why don't we go ahead and begin? And I'll start with a formal introduction. Are you ready? Is that good?
That's good.
Fantastic. Well, again, my name is Shannon Reed. I'm the Executive Director of Montgomery Area Chamber of Commerce, and our coordinator and leader of our MAC-U series this year is the lovely Kim Harris. She's an income specialist with Advanced Retirement Planning, and she has coordinated with guest presenter today to bring us what I believe is going to be very timely, relevant, and valuable information for right in the moment of this COVID experience that we're feeling as small business owners. And they're going to give us the action steps. And, you know, I was mentioning to many of you yesterday that listening to these press conferences really make my eyes glaze over sometimes. And I don't feel like we get to the action steps. And today is specifically to tackle some of those action steps and drill down what the economic stimulus and all of these responses actually mean to U.S. small business owners. So this is going to be a valuable one. When we get the end of this recording, you're going to want to save this and come back and listen again. Please save your questions for the end, and you can type them on the chat side. We will tackle those at the end. And I'm done rambling. I would like to turn this over to Kim and get us started.
All right. Good morning, everybody. I want to let you know that we have John Illig on the phone with us. He is a Series 65 fiduciary investment advisor and the managing member of ARP Advisors, Advanced Retirement Planning Investments Management sister firm. John brings 25 years of experience in retirement planning, and I've had the pleasure of working with John for the past 6 years. And so we have, I've learned a lot from John, and we've had a very good working relationship through the years. And I am excited that he agreed to get up extra early this morning because he is in the Phoenix, Arizona area to join us this morning. So I'd like to get started this morning. Okay. Now, hang on. Oh, here we go. So this morning, our focus is upon economical issues. We're not going to be talking about health or safety issues. And the information we're presenting to you, we believe it to be reliable, but it is definitely subject to change. And the three things that we're going to be covering this morning is government action, financial markets, and rethinking your plan. So we're going to talk first this morning about government actions. The Internal Revenue Service has extended tax returns and payments to July the 15th, 2020. And that includes individuals, corporates, and trusts. You can still file an extension for returns beyond July 15th, but payment, interest, and penalties start July 16th. This also includes estimated tax payments that were previously due on April the 15th. Corporations can defer up to $10 million as well. I just let somebody in, so now I have to go. Okay. And if you are owed a refund, please file as soon as possible. Records show that 72% of Americans received a refund last year, so it's crucial to move ahead with that. Last week, President Trump put some payroll tax reliefs in place in the form of tax credits for 500 or less employees It's 100% dollar for dollar credit for costs of providing coronavirus related leave to employees, employee care, or family care. It's up to 80 hours paid sick leave and child care where schools are closed and or child care unavailable. This reimbursement includes health insurance costs, and it's equivalent credit for self-employed on 2020 tax filing too. So they did not forget the self-employed entrepreneurs in this.
Kim, could I just add a couple things to this?
Absolutely.
Good morning, everybody. This is John speaking. Just to kind of, talk about this. What they're doing here is the major thing that the government is trying to do is to reduce the level of unemployment and therefore the impact on the economy. So what they're basically saying is for mid and small companies, again, 500 or less employees, what they're saying is that if you're keeping people on the payroll, but they're not actually there because they have to care for themselves because they're sick or they got family members or their schools are closed, they can't find other childcare. They're simply basically saying is that the money that you might otherwise be paying in the form of payroll taxes for your employees can instead be credited for keeping these folks on the payroll. And some of the examples that I've seen of that, to make it real simple, is let's just say that it's costing you $10,000 maybe a month or whatever the case might be to keep several employees on the payroll, even though they're effectively on leave or on sick leave or something like that, and you owe $12,000 in payroll taxes. What they're saying is, okay, keep the people on, okay, and you'll get a credit for that payroll tax, and they're not going to penalize you for that. So that's really what they're trying to do here. This is all about trying to give people sick leave, kind of an emergency thing, and they're going to give you credits against that payroll tax relief, if that makes sense. Okay, back to you, Kim.
Okay. And if this tax is not sufficient to cover the paid leave costs, the employer can seek expedited advanced refund by submitting a claim form. Now, that is supposed to be ready this next week, this form. It's not ready yet.
And I just saw, right before we were there, I just saw a little chat. I think it was Shannon had a question there. Let's go ahead and address that to the extent we can. It was something, do we have to apply? It's a little unclear right at the moment, Shannon, okay? A lot of times when these things get rolled out, a lot of the details aren't there. We know that next week they're going to have some kind of a form for an expedited refund, basically sending you money in advance is what that comes down to. My understanding, and I am not expert on what they're doing here, but my understanding at this point on this payroll tax relief is that, no, you just do it. Okay.
Yeah.
All right.
That's my
You just
understanding
do
as
it.
well. Mm-hmm.
Okay. And it's all going to get caught up in tax returns and things like that. But what I would always recommend, because again, we're dealing with fast moving information without a lot of detail, is, and you're going to hate that I'm going to say this, but if you're in that situation, it's probably best to try to seek clarification from the IRS itself, which means sitting forever on a phone. I'll grant you that. But they just haven't given us that degree of detail yet. So we know that the plan's in place. How it's actually going to be executed, and we're going to be talking this same phrase a lot today, is a little bit unclear.
I do have websites that I can email out so people can continue to check those. They do have, the IRS has Facebook and LinkedIn, and they are posting these this news as it comes forth. Okay, Shannon has, when employees do applicable, this business must reduce staff. Would any employees be applicable as the business must reduce staff to pay? Yeah, I think, John, addressed that. My understanding is that instead of, in his example, instead of paying the payroll taxes, you can utilize that money to keep people on.
The key thing there is they're trying to keep people on the payroll.
Right.
Okay. So to my knowledge, there's not any, I think I just saw that thing flash up briefly, Shannon. I think that it's not specific employees necessarily.
No.
Okay. It's any employee who was your employee, but now is effectively on sick leave or some form of that, and you want to keep paying them. That's the way it works.
Right. Due to the coronavirus.
Right.
We do have availability of emergency loans from the Small Business Administration, up to $2 million for small businesses and nonprofits, and the amounts and terms are on a case-by-case basis. I know some people have had bad experience with that, but that is still available specifically because of coronavirus. Let's talk about what the state of Texas has done for us. If businesses are ordered to shut down and the employer may not have to pay unemployment benefits, this is because of chargeback protection. The 1 week waiting period has been waived, and if you do have to lay off all your employees, then there is a rapid response unit that can help you access unemployment claims. So they have, Governor Abbott is doing all that he can do to help with businesses not being penalized for, I've got more people coming in, hold on please. Okay, welcome. Governor Abbott is doing all he can not to help businesses not be penalized if they need to lay off people during this time.
Kim, go right back up to the previous slide just for a moment.
Okay.
This is an important thing here too. This is I'm not deeply familiar with this, but Texas has this shared work program, okay? And what that allows for is partial unemployment benefits, what they call similarly situated employees whose hours get reduced. So I think the way you would interpret that is that, let's say you have two people who do the same job, but because of lack of demand in your business, you have to reduce those hours. Well, I think what that program is saying is that if both of them get their hours reduced, there is a partial unemployment benefit to help make up some of those lost wages. This is a Texas program.
Right.
And I think that's important as well when we look at this. What Kim was referring to previously was if you have to just lay everybody off, they have a fast track or some kind of fast response team to help those people access the unemployment benefit system. But if instead you're reducing hours for, again, similarly situated employees, which I read to be the same job function, okay? So in other words, let's say you had two people each on 80 hours a week doing the same function. Due to demand, you have to cut that in half. Well, rather than lay off one and keep the other, my understanding of how this program works is you could reduce both their hours and then apply for some partial unemployment benefits for both of them under that shared work program.
Yes, that is my understanding as well. The stimulus package is pending. As all of you know, it did not pass, but the $1 to $2 trillion expected to include direct cash payments to individuals and families. They're not really quite sure if it does pass how they're going to do that yet, and all that is still being discussed, again, with loans and assistance programs. John, do you have any comments about that?
Yeah, I've been following this very closely, and Shannon and I were kind of discussing this right before we started on here. There's going to be a lot in this fiscal stimulus. By the way, fiscal versus monetary. Just so you understand the terms, fiscal means stimulus or policy that comes out of Congress. Monetary means the Federal Reserve Bank. That's something different, and I'll be talking about that in a moment. But that's what those two terms mean, okay? So this package we know is going to be somewhere probably around $2 trillion. Go back up if you could, just please, Kim. Okay, so there's no question, because everybody's in agreement on direct cash payments to individuals and families. So the specific dollar amounts are still being battered around a little bit. We keep seeing it changing. What Kim alluded to is, how are they going to do that? And, you know, it's interesting. I saw an article, I believe it was yesterday, that kind of talked about this, to where it was saying, you know, this concept is kind of easy in theory, but how do you actually do it? Well, they know who everybody is who pays taxes, because they have, you know, records of that. So that part's kind of easy. But there's a lot of people in the country, for various reasons, most typically lower income, who aren't required to file tax returns because their income is so low. So part of the things they're trying to figure out is, how do we reach those people and get this money to them? So that's kind of what Kim was talking about. We look at these loans and assistance programs, the details are unclear, but you know, what's being bannered about a lot, and this really could be for the small businesses, hopefully, is that they're talking about direct assistance, again, to keep people on the payroll. And it's been bannered about that, you know, you've probably seen this, that if you end up getting one of these assistance loans, that if you don't lay anybody off, I believe it's 4 months was the last I've seen, then that loan will be forgiven. Now, none of this is final yet. And so, you know, it's probably, God, let's hope, going to be passed today. But who the heck knows? It's Congress, okay? So it's going to be a very big package. It'll be the biggest package in history. In fact, everything that we're talking about today is the biggest in history at this point. But until they actually pass something and can get the details out, we don't know exactly what it's going to be. And so we're all on a watch and waiting game here. I have 2 different news sites open on my other monitors right now, just looking to see what's happening. And so they're back in, you know, negotiations, so to speak. So it's coming. It's going to be a good thing. But what form it's going to take specifically, still a little bit up in the air.
John,
okay,
I'm going to turn it back over to you.
Okay, and I'm going to go ahead and talk just kind of what's happening in the financial markets, and maybe I can bring a little bit of clarity to folks who don't follow this real carefully. Go ahead, Kim, in the next slide, please. But the first thing is we're dealing with here is a historic decline in the stock market, not in terms of amount. We've seen bigger declines than this, but the speed of it. The S&P 500, this is as of yesterday, and the S&P 500 index is the gauge of the broad stock market. The Dow is only 30 companies. It's the S&P 500 that financial advisors look at and financial people determine what's really going on. And it declined 33% in 22 trading days. This is the fastest ever seen. Click, please, Kim. To put that in perspective for you, you see those little red boxes. We all remember the great financial crisis back in 07, 08. In that decline, it took 250 trading days to get to a 33% loss. This has happened in 22 days. Nobody's ever quite seen anything like this before, but actually we have. If you look at this chart and you look at the second, third, and fourth declines quickly, 23, 24 days there. That was, the crash that led to the Great Depression. Now, I don't point that out to cause any fear to anybody. It's just that we've never seen anything quite like this. There's a lot of reasons why this happened so quickly. The most important reason why it happened so quickly, though, is technology. Okay, if you go back to the 30s, all this stuff was literally done by hand. It took a while for people to sell assets or sell stocks or whatever the case is when we got into a crisis. Even when we go to October of 2007, the technology was not nearly as advanced as it is now. So this is a sign of something that many of us in the financial planning community have been concerned about for many, many years, which is the vast majority of stock trading that goes on, whether that's buying or selling, is done by now by supercomputers run on algorithms that make these decisions in literally milliseconds. And for those of us, who work at advanced retirement planning, for years we've been warning people that this is a danger in the market. I always like to say this is not your grandfather's stock market anymore. And so this has shown how quickly things can unravel because of the speed of technology. Okay, in terms of what drives these markets. Now, the opposite also happens. They can go up just as quickly because of that technology. But this is the first real test we've seen, for want of a better term, of just how quickly things can go south because of technology now in the financial market. So again, this has been historic. Next slide, please. Okay, so what's been going on? Well, the first thing you guys kind of might have been hearing about over the course of the last week or even 10 days was talk about trillions of dollars that the Federal Reserve, what they call the Fed, to provide liquidity to the financial markets. Now, it's important to understand that this is separate, what they're doing, the trillions that is going on there. The Federal Reserve Bank is not actually part of the U.S. government. It's a private entity. It functions as the U.S. central bank, okay, but it's actually a privately held entity, and the people on the board of that are appointed by the president. And right now Jerome Powell is the head of the Federal Reserve, but once appointed, basically they don't answer to anybody, including the president. And so they function separately from the government, and their job, the job of the Federal Reserve in simple terms, is really to, at least in theory, to maintain stability of the economy. And the major way they typically do that is through interest rate control, or really what we call influence. But they also are considered what is known as lender of last resort. And what that means is not necessary in normal times lenders to individuals, but lenders to the banks. The Federal Reserve is one of the primary regulators of the banks. So what they constantly watch is a couple of different things: the health of the banking system in terms of how well capitalized the banks themselves are, and also they also get involved in the financial markets in terms of trying to maintain what we call orderliness and liquidity in the financial markets. So what they've done previously, 2 days ago, I would have said, I would have had a number of like $1.5 trillion on here. As of yesterday, it's unlimited. So what they're now doing is they reopened the playbook of what they were doing back, that they really kind of invented coming out of the great financial crisis, which is buying certain types of bonds directly from what we call primary dealers, which are big firms that buy and sell bonds, okay? One of the first things they did, okay, or one of the most important, is direct purchases of mortgage bonds. Why is this an issue? Because a lot of the bonds that are invested in, be it by individuals or pensions or anything like that, are mortgage bonds. And what happens is that when we get into these kind of times of financial stress, these mortgage bonds become very, very difficult for the big firms that hold them to sell, because other investors are afraid to buy them, because if we get into an economic downturn, then the fear, of course, is that we're going to have people defaulting on their mortgages and these bonds become less of value. So to try to maintain, and that market got really convoluted last week, and in some ways it even got frozen. So why do they do this? What they say is, look, if you have these bonds and you can't sell them to anybody else because you have to raise money, then we'll buy them from you. That thing says QE there. That stands for quantitative easing, which is just their technical term for this. What is different now is also they're going to directly buy corporate bonds. Okay, not any corporate bond, but again, corporate bonds that have been issued. Bonds are borrowing instruments. So when a corporation issues a bond, basically it's borrowing money. Well, the fear here in what's been going on is lots of these corporate bonds are falling in value because of either the type of business they're in. So for example, think about a bond that was issued by an airline is an easy example. Well, now the airlines are losing money hand over fist, so people become afraid that they won't be able to make those interest payments on the bonds. And so the Federal Reserve is coming and says, okay, if this becomes a case, we'll buy them to keep liquidity. When all liquidity means is cash, okay? So the Federal Reserve is taking unprecedented steps, okay, to try to maintain order in the financial markets. They're actually going to include direct lending to large corporations. We've never seen this before. This is brand new. Exactly how that's going to work, again, nobody knows yet, but it was announced in the last couple of days. And then that last bullet point is backstopping money market funds. What are we talking about there? Well, I think most of us probably are somewhat familiar, if not completely, with a money market. So you might have a brokerage account or a 401k for that matter, and one of your options is typically money market. Well, most of us think about money market funds as simply being kind of a safe alternative to a savings account that pays a little bit more interest, but that's really not what they are. Money market funds, it's a huge market, are used for constant overnight lending between banks and brokerage houses and things like that that have to borrow money on an overnight basis to maintain their operations. Well, the Fed has said we're going to backstop these money market funds because, again, these things all have to do with the ability for credit to continue to be extended between these big financial firms. And so the Fed has stepped in and said, we'll backstop those money market funds, again, just to make sure that there is liquidity. And when we talk about liquidity, think of it as the oil that drives an engine. Without lots of cash for these brokerage firms and bond dealers and all this kind of stuff to buy bonds and sell bonds, okay? Because if you as an individual, let's say you own, you know, a Bank of America bond or a Boeing bond, you say, I got to get rid of this thing. You can only get rid of it if there's somebody willing to buy it, okay? And that's the same with these short-term overnight loans lending in the money market funds. And so basically, without getting any more complicated than I already have, the Federal Reserve has just basically said this is unlimited support to keep the oil moving the financial market so things don't freeze up. So that's a major thing that we've seen. Next, Kim. Okay, now when we look at interest rates, there's good and there's bad news on this. Let's start with the good news for borrowers. That first thing there is the federal funds rate. This goes right back to this Federal Reserve thing. Well, when you hear on the news, say you're watching CNN and you hear, oh, the Federal Reserve cut interest rates, or you hear the president calling on Jerome Powell, the president of the Federal Reserve, to cut interest rates. What they actually manipulate is something called the federal funds rate. Right now, it's at a target of between 0 and 0.25%, effectively 0, okay? 1 month ago is at 1.75%. A year ago, it was probably closer to 2, okay? So the point I'm making here is that you see, you know, just look at that 1.75 to 0.25%. It's a massive drop in those interest rates. So that federal funds rate then in turn drives other interest rates. Next, Kim. Okay. So the prime rate, most of you are probably familiar with. The prime rate is the interest rate charged by big banks on loans to what they consider their best customers, the best, most credit-worthy customers. As of yesterday afternoon, the prime rate was at 3.25%. I guarantee it's already changed one way or the other today because these things fluctuate constantly. Well, the prime rate's an important interest rate because that prime rate, again, what interest rate do we charge the most credit-worthy customers, particularly in the corporate world, okay? Then in turn drives credit card rates, mortgage rates, every other interest rate. So again, if we look at that 3.25 and 1 month ago it's at 4.75, again, dramatic drop in interest rates has gone into effect. Why does that happen? There's really two reasons that happens. One is the direct effect of the Federal Reserve taking action to reduce interest rates. What does that do? It makes it cheaper and easier for people to borrow money. But the other reason that some of these interest rates are dropping has also to do with stuff in the bond market where these yields that change constantly on these different bonds also drive these interest rates. But the point simply here for borrowers, this is looking to be a good time if we need to borrow money, refinance debt, things of that nature. Another click, please, Kim. Okay. Where we see a little difference in that is in mortgage rates. Okay, so as of yesterday afternoon, the 30-year fixed mortgage rate average was about 4%. Well, and 4.14 for a 30-year refi. Well, actually, mortgage rates haven't been reacting exactly the same drop as interest rates. In fact, they actually increased a bit about a week ago. Why would that be? Well, again, it has to do with fear. Okay, people who lend money, the mortgage business is dependent upon investors being willing to lend money to people, and that happens through the mortgage companies and the banks. And I talked about bonds a few minutes ago and mortgage bonds. So what happens is when a lender, whether it be a bank or be it just a mortgage company, a non-bank mortgage company, when they lend that money to a mortgage, they don't hold that loan. Okay, they take all these different loans they've done this month, for example, then they bundle them in and they sell them off to somebody who bundles them together in a bond, which is then sold in the open market to people. Well, why did mortgage rates go up slightly? Well, because of fear again. If we have a declining economy and people are a lot of unemployment, people fear that even if they make loans, they could end up getting defaulting. So we're seeing mortgage rates not actually react exactly the same as the rest of the interest rates. But nonetheless, that's pretty good for borrowers. It's a bad thing for lenders. Okay. So when we look at these interest rates, okay, the benchmark for the world, okay, on basic interest rates for lenders, in other words, the money you can make by lending money in the form of a bond or something, is the 10-year U.S. Treasury note. So let's put this to be sure we're all on the same sheet of music. When the government borrows money, which they do every week in terms of billions, they do that by selling what are called treasury notes or treasury bonds. And so they actually do it in what's called a Dutch auction. It's a reverse type of auction, but the point simply is that people who want to go to what's considered the safest place for the money, they buy U.S. government bonds. The more people that want to buy bonds, the lower the yield goes. In other words, the lower the interest rate goes on those bonds. And so right now, as of yesterday afternoon, the treasury note's at 0.8. What does this mean? It goes back to the same thing. This is bad for lenders. If you have a bunch of money and you want to make some yield or some interest on it, the amount of money you can make on that is dropping. So that's really what this means. Next click, please, Kim. And we see that in CDs. Okay, 1 year certificate deposit as of yesterday afternoon was paying one half of 1%, call it, in interest. A month ago, it was, call it, 25% higher. And so again, we see it's good if you have to borrow. It's not so good if you're an investor. Next. And we see the same thing. AAA bonds are investment grade bonds. And again, those yields are pretty low. In other words, if you have $1 million and you want to, lend it out to investment grade corporations, you can make 3.36%. Okay, so all I'm getting at is we look at these markets and stuff. Expect continued volatility with large swings up and down. We're seeing that we're seeing it every day. Yesterday, for example, the S&P 500 index lost about 3.9%, I think it was. Today, it's up 5.59 so far, and well, falling now. But the point is that we're going to see these wild swings, and the wild swings don't necessarily. Please, not yet. There, Kim. Okay. Okay. Those wild swings, up or down, does not necessarily mean it's going to stay that way. This is called volatility, and it's just reflective of people not knowing, which way things are going to go. So be very cautious of those who say, oh, I know that we're at the bottom of the market, time to buy back in. And nobody knows when this thing's going to bottom yet. And be very cautious of any kinds of offers or things like that. You see advisors or whatever say, oh, we can double your money. All this opportunity. Be very, very cautious of this stuff. And we're already seeing this stuff pop up. Next, Kim. Real quickly, I want to just talk about 401ks and IRAs. they both have hardship withdrawal rules, but those rules do not include unemployment or business disruption. Now, there's calls for Congress to change this, but so far I haven't seen anything in any of these stimulus packages where they're going to waive the tax penalties for withdrawals prior to age 59 and a half or anything like that. So here's my point. Particularly for those of you who are younger and have 401ks, if that's only your only source of savings, rather than trying to take a hardship withdrawal, which will be taxed and penalized, most 401ks offer what we call a loan provision. Now, if you take a loan from your 401k, there's no tax penalty if you're under 59 and a half, there's no taxation when you take it. And then over time, you can repay that loan. So that's a better way to go if your retirement plans are your only source of savings. Next, Kim. And I'm going to turn this back over to Kim now about just kind of rethinking your plan, and we want to leave plenty of time for questions. So back to you, Kim.
All right. Thank you, John. Appreciate it. And rethinking your plan and looking at some action steps. One of the things that's crucial is to basically keep your business assets from in separate banks from your business liabilities. We've had clients that, and I know that there's many more examples, that because they have had their assets and their liabilities in the same bank, the banks can seize those assets and to reduce the liabilities, and that has put many people in a tremendous bind. There are things that you can put in place to keep that from happening. Those specific things depend on a case-by-case situation. The other thing real quick here is if you're within 10 years of retirement, there are things that you need to look at quickly just because of what's been happening in the market. So business survival, I mean, we have to all reduce expenses as much as possible. Pay close attention to the eligibility for assistance programs. The one action step for today is, focus on, understand what can happen with the unemployment as Governor Abbott has proposed, and also what can people do through the payroll assistance and cutting of those taxes, because that can free up a lot of cash for you, not having to repay the what you're setting aside to pay for taxes. But again, you have to make sure you're doing the right thing. I do have links that I can email you that will take you specifically to those sites that are changing hourly and daily. And when you find something that will help you, move on it and apply for it for help. So now we want to go ahead and open it back up for questions. Shall I go ahead and just unmute everyone?
Yeah, I think that's the best thing to do, yeah.
All right, hang on just a moment. All right, so everybody is unmuted. You'll have to unmute yourself too.
Okay, I will start. Wonderful. This is Shannon again. Make sure that when you have a question that you introduce yourself with your name and your business, and be careful about your background noise. When we're all unmuted, then there becomes a lot of extra in the presentation. So as I'm listening to a first step today that would mobilize some funds, and you're saying that in the payroll tax, where you would have normally set aside money in your monthly and annual budget to pay this, you now be free to use.
Excuse me just a minute. If everybody could mute yourself, and when you're ready to speak, then unmute.
That's
okay. Go ahead, Shannon.
Yes, so you're suggesting then that today, if I've got payroll tax money set aside in my budget, that I am free to go ahead and apply those budgeted funds. I don't have to go through any permission steps to use that money. You're just saying that now it's freed up in my budget, that I can go ahead and use that, apply it to paying our employees now, and then later on, I will not have to turn it in. So that's how I'm understanding what you've explained.
And that's what we understand. I would like to say that I would like to email out links so you can read it specifically for yourself.
Okay, good. Yes. So we want
Yes.
to make sure that we don't start using that money and then find ourselves in a pickle.
Exactly.
Yes. Okay. Good, good, good. All right. Other questions? I'm going to mute myself, but please, this is a great opportunity for us to really weigh in.
I have a question. A preschool that is operates under a church, would they have the same payroll tax?
Yes,
law applied?
they do, because it applies to nonprofits as well.
Oh, okay. That's
Yes.
good news.
Yes, ma'am.
Thank you.
Is there any resources that we could provide to our employees to help them file for unemployment in this time?
Yes, ma'am, there is. Again, I can email out those that link to you that will take you directly and give you specific to the page and give you specific directions.
Great, thank you.
How do I share this presentation with people afterwards?
Shannon,
Well,
I can forward this to you.
That was
Yes,
Leslie.
ma'am. Sorry, I had to unmute. This is Shannon from the chamber, and we have recorded this entire session. John was fabulous at giving us a real in-depth understanding of what's happening, both in the short and long term. So I know that many of you are going to have to digest this by reading it and listening to it again. And you've got people that aren't on the call today that you know need to hear about this. We have some employers in town who need to really understand the shared work situation. I think that's going to be a powerful thing. I think of our restaurants and our servers who have the same job descriptions, and they're kind of splitting what would have normally been a full, each of them having full hours. So that would apply, the shared work program would apply to them as well. So yes, Kim will make sure that I have the link to the recording, and we will get that out to all of our members and anyone on this call. So we'll make
and
sure.
if I could just make a comment about that, that's fine. Just please bear in mind that what we're doing here this morning is trying to provide very broad information. And so before taking action on any of these things, again, Kim will send out links to websites and things like that, but we don't want anybody to perceive this as being definitive. Things are moving very, very quickly. We put this together very quickly. So I just want to make that point.
You're absolutely right, John. I feel like we are living in a new world every morning that we wake up, and paradigms change daily. So it's imperative that we go to the source. So we do look at the state websites and the IRS websites and the COVID-19 websites. We need to make sure we're looking at the original source.
Correct.
I want to go back to the lady that asked the question about sharing information with your employees. And could you come back on? What is your name?
Pam Arquette.
Okay, Pam. Are you looking at making laying off everybody or several people?
Just a portion at this point, yeah.
Okay, there's things that you can do that the state has put in place if you have to lay off more than one person. And I will send you those links, because you can start that for them. Before you do that, please review the information on the payroll taxes that the federal government is giving you an option on, because that may help you keep some people employed.
Yeah, okay.
And there's a question about should businesses talk with their insurance agents about income loss claims. Shannon, I'm going to turn that back over to you to answer that because you have done a lot of research on that.
Yes, absolutely. To every single person on this call, if you have a commercial policy and in those pages you can find loss of business income as one of your benefits there, file the claim. File the claim. Your claim adjusters are going to tell your agents that you can't get any help anyway. They're going to discourage you to file, or they are going to file it and give you a denial. I'm working with chambers across the state. We're fighting this. It's wrong times 5,000 is wrong. I have other chambers in other states who are building a coalition because this is bigger than just one claim. And despite any aid or stimulus that comes from the government, you've been paid thousands of dollars annually for this very moment and you have coverage. So any of the denials that I have seen so far are illegitimate in my opinion, and I think it's a scam. I'm just being very cold and honest with you because I'm tired of hearing the pain that's happening to our businesses and then us in the midst of this dire straits that are being denied. I have loss of business insurance and I'm a nonprofit and I can make my claim as well because honestly, people are not going to be looking to join or renew a chamber if you're trying to keep someone employed. So I am second and third and fourth down the line of the issue right now. I'm not on the front lines, but in the end, we want to keep our chamber doors open. That's why we have loss of business income. Events that get canceled because we're required not to gather more than 10 people at a time, that's because civil authority has demanded that we cannot gather together. And we've had to cancel events. That is loss of business income. So you have those same things. You have contracts that have been canceled because your supplier or vendor or clients are no longer doing the work or needing the projects right now. So everything is on hold. So yes, file the claim, demand that your agent process the claim, and hang on. And if you have not already completed the survey that I sent out I sent it to all of our chamber members and any other downtown Montgomery businesses. If you did not get my survey link, just let me know in the comments here and the email, and I will get you the link to complete. As a matter of fact, I believe I put the link on our COVID-19 Corona updates page on our website. If you would fill that out, I'm building my case. So that's what I have for you right now. I'm involved with a national coalition, and it's just wrong. Even if we get all the stimulus in the world, you should still be able to make a claim.
The other action step that I wanted to point out is that on last Friday, Governor Abbott declared that the state of Texas is in the Economic Injury Disaster Declaration and granted access to the Economic Injury Disaster Loan. So this is through the SBA, and I can provide a link for you as well for that.
Yes, and I realize that, and I mentioned this yesterday in our small chat on Facebook Live, I have my theories about why the people in Washington, D.C. are not making the FEMA style response the first option to get money to us. But now FEMA has gotten involved to some degree in the last 24 to 36 to 48 hours. But we have yet to see the role they play. Again, things are moving and, every day is a different story. I see a question here from Snowball. Do you make your claims as they happen, or do you wait until this entire monster is over? I would think that it doesn't quite matter. right? Because as long as you're not making the same claim twice, you can either do small increments as you go, because quite honestly, how long will this stretch out? We don't know right now. So it would seem to me that if you can claim and prove a loss for a season of time, and you prove that, put a stamp on that and process it, if you have another one following, we don't know if they're going to say wait and make it all at once, but I would say it's an ongoing scenario, and perhaps do that.
The other action step that we covered is to make sure that your liabilities and assets are separate. That's crucial if you ever get into a default situation. Let's say you are at ABC Bank and you have your loans there, but you have all of your cash there as well. You need to move your cash to another bank. So you have those separate.
Wow.
Yes.
Monica asked the question, she wants to really clarify, do we still have to pay the unemployment penalties? I can't seem to get a definitive answer.
Not that I understand that they don't. There is an act in place, and let me get that to you. It is called the chargeback protection.
Excellent.
Mm-hmm.
Okay. Snowballs has mentioned yesterday the city of Montgomery did extend their disaster status for the city, and that is in order to make businesses and the people eligible for that assistance. So we're thankful to the mayor for doing that and signing that.
The specific wording on that chargeback protection is that you would have to have a shutdown order. If a business shuts down due to a closure order from a government entity, you would have the chargeback protection and not have to pay the unemployment.
Well, now I find that very concerning because we are on a very limited and restricted diet right now in Montgomery County, but we haven't yet hit the mark of lockdown shelter in place mode.
Right.
But we are still experiencing the need. And you were talking to Pamela earlier, who was asking about the help to her employees.
Yes.
She is the owner of Chronic Tacos. So she is in a scenario where her business is still open, but as you can clearly see, she's not able to hang on to all of her employees. So, and Monica Romero at Family First Urgent Care as well has to be open. She is an essential business. So even in lockdown, she would not experience the lockdown mode. So something has to be able to trigger them having the opportunity for no unemployment penalties. So Monica, hang on there, because we're going to get you to the right sources and make sure that we get the answers to you, because you're not alone in that question.
Right. And there is the shared work program, to where if you have to cut an employee's hours, that they can still work and receive partial benefits through unemployment.
Okay, it is 9:30. I don't want to cut us off if we have tons more rolling in, but let's see if we have one or two questions left. We'll tackle it and we will rock and roll for today. We will shut this down and we'll take further questions via email and try to get answers out to everyone. We're doing the best we can to get you the most current information, and we are super proud of all of you for the work you're doing to keep very strong. All of you are essential to this. It is not any one person making us stay alive here. So thank you so much. And thank you, Kim and John, for an incredible wealth of knowledge today and getting us to a point where we can digest so much of this. It's happening at the speed of light. Final thoughts?
Well, you're very
everybody.
welcome. Yes, glad we appreciate the opportunity to be able to serve the community in this way.
Absolutely. John, any final thoughts before we sign off with you, sir?
No, just like I said, just, you know, from the financial market standpoint, we're going to continue to have a lot of volatility. And so, you know, speak with your advisor in terms of any actions you might be thinking about taking, something like that. Even when we get this stimulus passed, it's not like everything's going to return to normal overnight. Okay. And that's true just right across the board. So I wish everybody the best of luck and good health.
Well, thank you so, so much. All right, Kim, well, I think, oh, Snowballs received a note from the orthodontist that Governor Abbott has closed them.
Oh, wow.
We'll need to take a look and see if our non-essential services have been closed down. So we'll definitely need to be staying alert for those things.
Yes.
And I heard that this morning, Galveston County at the coast has already issued their shelter in place. Harris County should be next today to issue their shelter in place. Coming from the north, the other day, Dallas County already issued their shelter in place. Then I heard Waco yesterday, and then Bryan College Station in Brazos County has already issued their shelter in place. So it is coming and closing in from both sides. So be prepared. Have an alternate plan for you to be able to work at home if you need to keep things going. Half an hour ago. Okay, thank you, Monica.
Yes, and as these with the dental services being shut down, even though they have not been on this call, I would like to be able to get this information to them because of the mass layoffs that they are going to have to do.
Oh man, indeed, yes. So in our chamber, we'll make sure that we reach out to in our community any of those that are applicable. Well, thank you all. And it's 9:34, so we do have to call it at some point. So I appreciate so much everyone joining us today. What an incredible session. And we'll keep you informed.
Yes, and if you have further questions, my email address and phone number are down there. I'm also on the chamber site. You all have a great day. Be safe and healthy. Thank you for joining us.
We'll see you at lunch.
Yes.
All right.
Okay.
Bye-bye.
Bye-bye.